Welcome to the end of the IFRS Spotlight, as I told you, Samuel. In this episode, we'll be considering IFRS Accounting Standards Interpretations, titled, Do Not Ignore IFRS Accounting Standards Interpretations. As the standards are issued or made public for use, there may be transactions, events, and developments that may not be explicitly captured under the provisions or consideration, or even the basis of conclusion of the production or issuance of the existing IFRS accounting standards. Therefore, preparers and consultants who relate to financial statements often write the ISB seeking specific clarification to transaction, events, and development that are not clearly captured or covered under any of the IFRS accounting standards. The ISB, through its relevant interpretations committee, where necessary, issued interpretations on issues raised or matters referred to them when necessary. And these interpretations are numbered and they are part of IFRS accounting standards. We have SIC interpretation number 7. SIC interpretation number 7 is titled Introduction of the Euro. This interpretation was issued when certain European countries adopted the euro currency. In the context of Nigeria and other English-speaking African countries, or even the African continent, if a single currency is adopted by the sub-region or region, the provisions of these interpretations, together with the overall provision of IS 21, the effects of changes in foreign exchange rates are considered in knowing how to deal with balances in foreign operation and foreign exchange transaction balances in these other nations based on the uniform adoption of a single foreign currency. That is SIC interpretations number 7. We have SIC interpretation number 10, titled Government Assistance. No specific relation to operating activities. This interpretation is interpreted or applied together with the provision of IS 20, titled Accounting for Government Grants and Disclosure of Government Assistance. The interpretation focuses on certain resources that may be given to an entity upon which no condition is required to be met whatsoever. Generally, the interpretation provides that such grants, such assistance that are not based on any condition should be recognized directly in the relevant reserve of the entity concerned. That is SIC interpretation number 10. You have SIC interpretation number 25. SIC interpretation number 25 is titled Income Taxes. Changes in the tax status of an entity or its shareholders. Income taxes. Changes in the tax status of an entity or its shareholders. This interpretation is applied together with the provisions of IS 12 income taxes. That is SIC interpretation number 25. We have SIC interpretation number 29, titled Service Concession Arrangements. Service concession arrangements. This interpretation is applied alongside the provisions of IS 1 as to how the relevant item is presented on the face of financial statements. Is applied together with the provisions of IS 2 inventories, IS 16 property, plant, and equipment, or IS 38 intangible assets, depending on the particular item concerned and the terms and provision of such concession arrangements. That is SIC interpretation number 29. We have SIC interpretation number 30, titled Intangible Assets, Website Costs. Intangible Assets, Website Costs. When an entity develops its own website, how are the expenses incurred in the process of developing the website treated? What portion is expensed? What portion is capitalized towards compounding the spending into an amount that is carried as intangible assets? That is the matter for consideration under SIC interpretation number 30. This interpretation is considered together with the large provisions of IS 38 intangible assets. We have IFRIC interpretation number 1. IFRIC interpretation number 1 is titled Changes in Existing Decommissioning, Restoration, and Similar Liabilities. Changes in existing decommissioning, restoration, and similar liabilities. This interpretation is applied in conjunction with the provision of IS 37 titled Provisions, Contingent Liabilities, and Contingent Assets. We have IFRIC number 2. IFRIC number 2, titled members' shares in cooperative society and similar instruments. Members' shares in cooperative societies and similar instruments. The provision of this interpretation, IFRIC number 2, the provisions are applied in the context of IFRS 32, financial instrument presentation, IFRS 9, financial instruments, IFRS 2, share-based payments, and other relevant items that may deal with members' share in cooperative society and similar financial instruments. So IFRIC number 2 is titled Members' Share in Cooperative Society and Similar Instruments. We have IFRIC number 5. IFRIC number 5 is titled Rights Arising on Participating, Rights Arising on Decommissioning, Restoration, and Environmental Rehabilitation Funds. Rights arising under decommissioning, restoration, and environmental rehabilitation funds. So this interpretation, IFRIC number 5, is applied in conjunction with the provision of IAS 32, as the case may be, IAS 37, as the case may be, and other relevant provisions of the IFRS Accounting Standards. We have IFRIC number 6, IFRIC interpretation number 6. IFRIC interpretation number 6 is titled Liabilities Arising from Participating in a Specific Market. Liabilities arising from participating in a specific market with electrical and electronic equipment. Once again, IFRIC number 6 is titled Liabilities Arising from Participating in a Specific Market with electrical and electronic equipment. So this interpretation, of course, part of the standard, this interpretation is considered in the light of IAS 37 provisions, contingent liabilities, and contingent assets. We have IFRIC number 7. IFRIC number 7 is titled Applying the Restatement Approach under IAS 29, Financial Reporting in Hyperinflationary Economies. IFRIC number 7 is titled Applying the Restatement Approach of IAS 29, Financial Reporting in Hyperinflationary Economies. This interpretation is applied together with the provisions of IAS 29, Financial Reporting in Hyperinflationary Economies. We have IFRIC number 10. IFRIC number 10 is titled Interim Financial Reporting and Impairment. Interim Financial Reporting and Impairment, IFRIC number 10. IFRIC number 10 is applied in conjunction with the provision of IAS 34, Interim Financial Reporting, and IAS 36, Impairment of Assets. That is IFRIC number 10. We have IFRIC number 12. IFRIC number 12 is titled Service Concession Arrangements. Service Concession Arrangements. It is applied together in conjunction with the provisions of SIC number 29, provision of IAS 16, IAS 38, and other relevant provision of the IFRS Accounting Standard. That is SIC interpretations number 12, titled Service Concession Arrangements. We have SIC interpretation number 14. SIC interpretation number 14 is titled IAS 19, the limits on the defined benefit assets, minimum funding requirements, and interaction thereon. Once again, IFRIC number 14 deals with IAS 19, the limits on the defined benefit assets, minimum funding requirements, and the interaction. So this interpretation is applied together with the provisions of IAS 19 employee benefits. Moving forward from IFRIC number 14, we have IFRIC number 16. IFRIC interpretation number 16 is titled Hedges in a Net Investment in Foreign Operation. Hedges of a net investment in a foreign operation. That is IFRIC number 16. This interpretation is applied together with the provision, with the heading provision of IFRS 9 generally. That is the provision of IFRIC number 16. We have IFRIC number 17. IFRIC number 17 is titled Distribution of Non-Cash Assets to Owners. IFRIC number 17 is titled Distribution of Non-Cash Assets to Owners. This interpretation is applied together or in conjunction with the provisions of IAS number 32 titled Financial Instrument Presentation. Financial Instrument Presentation. That is IFRIC number 17. We have IFRIC number 19. IFRIC number 19 is titled Extinguishing Financial Liabilities with Equity Instruments. Extinguishing Financial Liabilities with Equity Instruments. IFRIC interpretation number 19 is applied in conjunction with the provision largely of IAS 32 Financial Instrument Presentation, and also IAS 37, as the case may be, for provisions, contingent asset and contingent liabilities. That is IFRIC interpretation number 19. We have IFRIC interpretation number 20. IFRIC interpretation number 20 is titled Stripping Costs in the Production Phase of a Surface Mine. Stripping costs in the production phase of a surface mine. This interpretation is applied in conjunction with IAS 16, IAS 38, and also certain provision of IAS 37, provisions and contingent liabilities and contingent assets. That is IFRIC number 20 titled Stripping Costs in the Production Phase of a Surface Mine. We have IFRIC interpretation number 21. IFRIC interpretation number 21 is titled Levies. This interpretation is applied in conjunction with the provision of IAS 37 itself and IAS 12 income taxes. That is IFRIC interpretation number 21. We have IFRIC interpretation number 22. IFRIC interpretation number 22 is titled Foreign Currency Transaction and Advanced Consideration. Foreign currency transaction and advance consideration. When an entity makes advance payments or receives advance payment on transactions that are not yet on obligation that are yet to be fulfilled, a supply that is yet to be made, what spot exchange rate is used? An advance of the collected or given, but the underlying transaction has not been fulfilled. What date spot exchange rate is to be used? That is a clarification made by IFRIC number 22, foreign exchange transaction and advance consideration. Now, we also have lastly IFRIC number 23. IFRIC number 23 is titled Uncertainty on the treatment of income taxes. IFRIC number 22, Uncertainty over treatment of income taxes. The provision of IFRIC number 23, the provisions are applied in conjunction with the overall philosophy and provision of IAS 12 income taxes. IFRIC number 23, Uncertainty over the treatment of income taxes. So these are the interpretations we have as a whole. As at the dates of the upload of this video, there are 20 in all. 5 under the SIC interpretations and 15 under the IFRIC interpretations. So let's remember, as we apply IFRS Accounting Standards, let's remember at all times that these interpretations, either as SIC or either as IFRIC interpretation, are part of IFRS Accounting Standards. And we are not to leave them out or to consider them in applying this standard while considering transaction, events, and conditions. Thank you for joining us for this episode of End of the Spotlight with OJ Samuel. We want to invite you to please subscribe to our channel, watch our video, like our video, share them widely among our professionals that you know who have a thing or two to do with any form of reporting under the global framework. Thank you once again and see you in our next episode. Bye for now.